What's going on YouTube? So in this video, we're going to be going over the closing costs that's associated with an FHA loan. So if you're an individual who's looking to purchase your very first or next property, definitely watch this video to the very end as I go over all of the closing costs that's going to be associated with an FHA loan and so much more. Now, my name is Art Smith, MLS number 2013410. If you're new to my channel, do me a favor and consider subscribing to the channel. And if you find value in this video, do me a favor and smash that thumbs up button. Now, to give you a table of context of what I'll be going over in this video. First, I'll be going over the overview of the FHA loan. Then I'll be going over some of the closing costs that's associated with an FHA loan, and I'll be breaking down the individual charges that you'll see on a loan estimate and or a closing disclosure. And then towards the end of this video, I'll give you a list of things that you could do in order to minimize some of the closing costs that's associated with this type of loan. So if that sounds like something that you are interested in, do me a favor and stick around to the very end of this video. And of course, if you have any questions that pertain to closing costs and FHA loans, do me a favor and drop your questions, comments, or remarks in the comment section below. And if you have anything privately that you want to address to me, I will list my email in the description box below as well too. Now, first, let's go over the overview of an FHA loan. Now, FHA loans are going to be for first-time homebuyers and non-first-time homebuyers. This is not going to be exclusively for individuals who are purchasing their very first house. If you're purchasing your second, third, or fourth house, you could still use an FHA loan. Minimum down payment for an FHA loan is going to be 3.5% with a FICO score of 620 and above. If you have a FICO score in the 580 to 619 range, then your minimum down payment requirement for you is going to be 10%. Now, new loan limits going into 2025 is going to be $806,500 for most areas. Anything above that $806,500 mark is going to be considered an FHA jumbo loan. So you may or may not qualify for an FHA jumbo loan depending on your location, so your city, as well as your county, as well as your income on an annual basis and your debt to income ratios. Now, speaking of debt to income ratio, if you have a FICO score of 620 and higher, then your debt to income ratio is going to be 38% on the front end and 57% on the back end. If you have a FICO score between 580 and 619, then your debt to income ratio on the front end is going to be 38% and on the back end is going to be 45%. Now, with an FHA loan, you could purchase one unit all the way up to 4 units. So if you're looking for a duplex, triplex, or fourplex, then you definitely could use an FHA loan. Now, mortgage insurance is going to be required on FHA loans, and that's going to be at a factor of 0.55% of your overall loan amount. How you would calculate that is you would take your overall loan amount, times that by 0.55%, and whatever number that you get, divide that by 12, and that will be your mortgage insurance premium on a monthly basis. Also, with FHA loans, you're going to have something called an upfront mortgage insurance premium, which is going to be factored at 1.75% of your overall loan amount, and that's going to be a part of your closing costs, which I'll go over in the itemization portion of this video. Now, I do have to add that FHA loans are only going to be exclusively for individuals who intend to occupy their home as their primary residence. So if you're looking to use an FHA loan for a second or vacation house, as well as an investment property, unfortunately, you will not get a loan approval because these are going to be exclusively for primary residence occupants only. Now, let's go over some of the closing costs that's going to be associated with an FHA loan. Now, some of the closing costs that you're going to see on every single FHA loan are going to be origination fees, discount points, underwriting fees, flood insurance, appraisal fees, tax cert fees, settlement or closing fees, notary fees, inspection fees, lender title insurance, owner title insurance, deed and lien recording fees, prepaids, homeowners insurance, as well as property taxes. These are going to be some of the fees that's going to be located on your loan estimate, as well as your closing disclosure when obtaining an FHA loan. So what I wanted to do in this video is bring up a loan estimate so that you have a visual representation of what you will receive when obtaining an FHA loan. So let's go ahead and go over that document right now. Now, this is going to be from a past client, and you're going to notice that on a closing disclosure or a loan estimate, some of these loan charges are going to be broken down into sections. So the first section that you're going to see on your loan estimate is going to be section 8, which is going to be your origination charges. Now, in this example, this is going to consist of points as well as an underwriting fee. So for the points charged on this estimate, you're going to see a point cost of 0.755%, and that's going to equate to a cost of $3,979, as well as an underwriting fee of $999. Now, the points charge is going to be a charge to the borrower to obtain an interest rate of of their choosing. This borrower at the time of origination wanted a lower interest rate, and that lower interest rate was going to cost them $4,000. They were okay with that charge because of the lower interest rate, which will cause them to pay less interest over the life of the loan. So if you're somebody who wants to buy down the interest rate on a loan in order to incur a lower interest rate so that you could pay less over the life of the loan, that's where you'll see this points charge or that cost on your loan estimate, and that's going to be in section A. Now, for most loans and for most borrowers, you do not need to buy down your rate in order to obtain a mortgage with a lender. If you choose not to buy down your rate, then you will see a total cost of $0 when it comes to your points fee or your loan estimate. And also, if you don't want to pay an underwriting fee of $1,000 at closing, then you could also choose to finance your underwriting fee into your overall loan cost as well too. So both of these costs on your loan docs could be zero, depending on how you want to structure your individual loan document. Now going into section B of this loan estimate, these are going to be services that you cannot shop for, and these are going to be fees like your appraisal fee, credit report fee, flood determination fee, flood life of loan coverage, life of loan tax service, as well as your tax certification fee. Now these are also going to be considered junk fees or miscellaneous fees just because of the overall cost of these fees. Now you may be asking yourself, why include some of these charges? Well, that's going to be dependent on your title officer or your escrow officer. Some of these fees they have to disclose to you as the borrower. So you'll see some of those charges here on section B, which is going to be the services that you cannot shop for, because these services or these costs are going to be associated with your escrow or attorney that's going to be handling your closing on these loan documents. Now, section C of your closing disclosures or your loan estimates are going to be services that you can shop for. Now, most borrowers, just like yourself, are not going to technically shop for these charges or these services. These services are going to be either inherited or affiliated with the lender that you're going to be using, or the agent that you'll be using, and or the seller that you'll be purchasing the house from as well too. So depending on how your purchase agreement is structured, you can indeed shop for your escrow office or your attorney, or that again may be inherited by the seller of their choosing. However, if you can, or if you have the option of shopping for your own title or escrow or attorney, then these fees are going to be located in section C of your loan estimate or your closing disclosure. And those are going to be your lender title fees, notary fees, and settlement and or closing fees, also known as escrow fees. That's going to be located in this section of the closing disclosure and loan estimate. And then in section D, these are going to be your total loan costs from A, B, and C sections. So all of these added up is going to be found on section D on the left side of your loan estimate. Now, located on the right side of your loan estimate, these are going to be your other costs, and these are going to be broken down into 5 or 6 additional sections. That's going to be section E, F, G, H, I, and J. So let's go over those right now. So section E is going to be your taxes and other government fees, like your recording fees as well as your transfer tax fees. And on this section, you're going to find the fees that's associated with recording the deed as well as title to your county recorder's office, as well as any other liens like your mortgage that's going to be recorded at the county recorder's office as well too, and any of your county transfer taxes that's associated with the transfer of the asset from the seller to you as the buyer. That's what you're going to find here on section E of your loan estimate. Now, be mindful that this is going to be a loan estimate, so some of the charges that are going to be found here on your loan estimate are not going to be accurate or not going to be included as well too. And that's going to be because the escrow office or attorney's office is not going to have all of the fees that's associated with this transaction. So just be mindful that your closing disclosure is going to differ slightly or largely, hopefully not largely, but it's going to differ from your loan estimate because the escrow officer or the attorney, again, is not going to have all of the detailed cost that's going to be associated with your transaction. Now, moving on to section F is going to be your prepaids. Now, this is going to be your homeowner's insurance premium, your mortgage insurance premium, prepaids on interest, and also property taxes as well too. Now, if you're going to be prepaying for your homeowner's insurance and or your property taxes, that will be located here in section F of your loan estimate, as well as depending on when you close on the property, you're going to be seeing a few days or possibly even a full month of prepaid interest on the actual loan of your acquisition on the property, and that will be located here in section F. Now, moving on to section G, this is going to be the initial escrow payments due at closing. Now, for this section, section G, this is where lenders like to include some type of cushion, especially if you're going to be impounding or including your property taxes and homeowners insurance into your overall mortgage payment. They're going to want some type of cushion from you so that just in case if your homeowners insurance premium increases or your property taxes increase from this year to next year, they could have some type of spread or some type of cushion from you so that they don't have to increase your overall monthly dues significantly, and they could use that cushion to pay for the difference that's owed from you to the property taxes or the homeowners insurance. And the cushion is typically going to be around 3 to 4 months, sometimes even higher. So just take whatever your property taxes are going to be and times that by 3 or 4, and that will be included in the section G of your loan estimate as well as your homeowners insurance. Just take 3 or 4 months of your estimated homeowners insurance on a monthly basis and then include that in section G, and that will be your rough estimate of what will be included in the initial escrow payments due at closing when you close on your property. And then section H is going to be any other loan cost that's going to be associated with this transaction. So in this section, we have the owner's title insurance policy that's going to be included in this section right here. And then if you scroll down, you'll see section I, which is going to be the total other costs, which is going to add up the section E, F, G, and H costs, and that's going to give you a numeric value and sum right here. And then section J is going to be the total closing costs that's going to be associated with the left and right section of your loan estimate. That's going to be included right here, as well as any other lender fees that's going to be given to you at the time of closing. So if we scroll down to the calculated cash to close, this is where you're going to have your total estimated closing costs minus any down payment or financing charges or deposits that's going to be given when purchasing a house. At the very bottom of your loan estimate, that's where you're going to have your estimated cash to close in order to finalize all of your paperwork and get into the home of your dreams. So as you can see, this could add up to a significant amount depending on how you structure your overall loan and the overall acquisition or overall deal when it comes to buying your first or next home. So what I want to do now is I want to talk about how to minimize some of these closing costs when obtaining an FHA loan. So how to minimize some of these closing costs? Well, the first thing that you could do is you could negotiate for seller credit, especially if the home has been on the market for 30 days or longer. This is a really good opportunity for you to negotiate some type of cash from the seller in order to cover some or all of your closing costs. And number two, you can negotiate lender credit from the lender that you're going to be obtaining a loan from. Lender credit works just like seller credit. This is going to be cash or credit obtained from the lender in order to cover full or partial of your closing costs. Now, this could be done on all FHA loans, whether it's presented to you or not, just an FYI. And all you would need to do is talk to your lender or loan officer and let them know that you want a higher interest rate in exchange for some type of lender credit so that you could use that credit in order to pay down some of your closing costs. So if you're somebody who is strapped for cash or don't like some of the closing costs that's associated with FHA loans, like the upfront mortgage insurance premium, definitely take advantage of this strategy to reduce some of your closing costs. And number three, or the third thing that you could do in order to minimize some of your closing costs, is to take advantage of a down payment assistance program and or fund. Now, most down payment assistance programs will allow you to use those funds to not just cover the down payment portion of your acquisition or your home purchase, but they will also allow you to use those funds to cover all or partial of your closing costs. So again, if you're somebody who is strapped for cash or who doesn't want to come out of pocket significantly on your first or next home purchase, definitely look into down payment assistance programs to cover some or all of your closing costs. If you want more information about down payment assistance programs, definitely scroll through my channel. I have a couple of videos that pertain to down payment assistance programs. So definitely look into my other videos. And if you have any questions about this portion of this video, definitely drop your questions and comments in the comment section below. All right, guys, that concludes this video on FHA closing costs. Definitely watch this video over and over so that you have a better understanding of what's going to be required to you or from you at closing when it comes to obtaining an FHA loan. I wish you the best of luck on your home buying journey. If you haven't done so already, subscribe to the channel, like the video, and until next time, I'll catch you on the next one. Goodbye for now.